Good morning. the 12th of September, 2025. Welcome to Risk Neutral Trading. This is my virtual trading journal. It's not for financial or trade advice. The usual disclaimers in the description. Any times that I speak of or refer to or that are visible on my screens are Central Standard Time. The idea of this is that it is my virtual trading journal, meaning that I capture everything in the markets on my screens with the video, and then my voice over here provides some insight as to what I was thinking. That eliminates me from needing to be screen snapping and typing and doing all those kind of things that are required for journaling. And I believe that journaling is important. So I push this to YouTube because I am then able to review the stream on any device. And also it provides another layer of transparency and accountability. No trades. I have a firm commitment that no trades in these accounts are taken off the stream. So that's another reason that the stream is so long every day. It's basically 7 hours each day. I start at 8 o'clock in the morning now with the pre-market and the setup and all those things, and then stream all day until the cash close at 1500. So there you go. This is streamed in 1440p, so if it's a little grainy on your end, click the icon or the gear thing and select high def. Okay, let's get out of the box here. The first order of business every day are the numbers. And they are as follows today. The only thing we have out today which can move the market is the Michigan sentiment, consumer sentiment number. That's all coming up at 9 o'clock. For some reason, it's always just a 2-star event, but it definitely can move the market. And then we're going to have some Baker Hughes rig count and things like that if you're a crude trader. This is investing.com right up here, and it is free. You can filter it any way you want. You can look at tomorrow, next week. You can check out the earnings. We have FedEx and General Mills today, and then FedEx next Tuesday. So there you go. And the other news source that I use now is here. This is Financial Juice, also free. Apple delays iPhone Air Punch launch in China. Yeah, I saw some drama about that, some news about that last night, but I didn't bother looking, to be honest with you. And Trump is busy speaking on Fox and Friends since 7 o'clock this morning. So the political uncertainty is making itself known this morning. Now you see that in Financial Juice, University of Michigan sentiment prelim number is 3-star, and it can move the market, so beware. And as usual, well, that interview's over now. That was an hour. As usual, anytime, no political statement one way or another, but we have a very unusual situation now where we have an unknown critical risk potential around any of the administration folks that may be speaking or tweeting or something that could have a huge impact on the market that we don't know anything about. So in my opinion, you need to limit. I am limiting my exposure. I'm limiting putting on risk. A trader's prime directive is to preserve your account or protect your account, be able to trade tomorrow, right? So as the risk uncertainty level increases, then I need to scale back my desire to put on risk in the market. In other words, limit the amount of exposure you have to the market risk and only take A+ setups, etc. All right, let's get on with the pre-market now. It's yesterday was quite a day. Here is the RTH session yesterday, just about straight up. Closed a little off our highs. We did open a tad higher, and we've sold down below the previous IB high, taken some profits here, which is understandable, and now back up to the basically our POC from closing POC from yesterday. If you look at this, the overnight inventory is essentially 100% short. So I don't know. We might have taken most of it back here. Remember that this is a Friday. It is the last Friday before the big, hugely anticipated Fed rate decision, and also the contract rolls on the 15th. So we're looking at triple witching and all kinds of things. I would suggest being really cautious today, as every day, but there you go. This is the ES Mini, the NQ Mini, the ES Micro Composite chart, which is simply a RTH session only, daily candlesticks. Wherever they overlap, I draw a volume profile around them, and in so doing, it automatically highlights the high and low volume nodes, which are represented by these red and green lines. These are the high and low volume nodes of this micro composite volume profile. And it generates a micro composite VPOC, volume point of control. The red and green high and low volume areas are pushed automatically to book, as are the session prices. And this is the market profile for the ES. We're about normal volume. We're down 0.0% from the settlement, and the way that's determined is the last price as it compares to the settlement price. A lot of things, a lot of moving parts now, so be on your toes, risk management wise. This is Bookmap. This is the Dome, level 2. For example, there's 256 contracts or liquidity resting at 6,600 right there. And that was our high of yesterday. That is the all-time high, which was set in the RTH session yesterday. This is my micro composite column where I manually enter these various levels, the high and low volume nodes, the full session volume profile, which started plotting last night at 1700 and will continue through 1600 today. And this is the RTH volume profile from yesterday, which will reset this morning at 8:30. This is my notes column, which is pretty important to me. And the first thing I do, you see all the migrating VPOCs here, and you see the percentage, the statistical probabilities of all the various price levels which were input yesterday morning, just as I'm going to do now before the market opens. The first thing to do here is to clear all the notes. Boom. And then I put in the most recent auction micro naked volume point of control, which is right here. And that's from yesterday, because that is the location of the POC at close yesterday. RTH session close. Now, the next thing I do is determine the open type for this RTH session that's upcoming, and I change the title of the column. And how do you do that? The open type is real simple. There's only two criteria. If we opened right here, right now, where would that open? How would that open compare to previous day's close, which just happens to be right there, previous RTH close, and how would it compare to previous RTH range? Well, unfortunately, I hate it when we're right on the cusp here. We're higher than the close, and we are within range. So this would be higher in range, as was the title yesterday. You can set that title right here. Now, the reason I changed that is so that when I look at any snap or the stream, I can instantly have a lot of information from the previous session, RTH and overnight right here. This is the session. These are the session prices pushed directly from IRT. And there is absolutely nothing about what I do here that's mysterious or magical or hard to figure out. It's logic, data, statistics, probability, in other words. Period. Some levels that sometimes are questionable. POC. What does that mean? That is simply a marker of the price where the most contracts have traded so far in the session. Here is the POC for the full session right there at 88, and we traded 3,992 contracts. The second any one of these levels says 3,993, this yellow POC line will move there. That's just that simple. We have, there's a POC for the full session and one for the RTH. There is a Globex VWAP and a RTH VWAP. Now, Globex is not the ETH. Globex is the entire session. So it started at 1,700 last night and will go through 1,600 today. FYI, just like the full session over here. I should have probably called this Globex, but anyway. Another couple of levels that sometimes confuse folks are the IB high and low. Because of the naming, this stands for initial balance, which is old market profile stuff. And what these two levels actually represent are nothing more than the high and the low of the first 1 hour of the RTH trading session. Period. That's it. And there's no other indicators on my book map or my IRT. Any kind of little levels here or highlighted grays represent liquidity, as I pointed out before, and that's basically it in a nutshell. Let's look at the statistics here. Now, they come from this study in IRT. You see that yesterday we opened higher in range. IRT graciously highlights the correct open type, but only after 8:30. So coincidentally, we're expecting that to be the same today. The study looks back at 2,000 days, essentially, 1,999. Of these days, in the look back study, we opened higher in range 604 of the 2,000 days. Of the 604 days where we opened higher in range, price revisited the overnight volume point of control 503 times for 83.3%. Now, it happens to be right here under the VWAP, so because here's the POC, right? You see that? Let's go right here and go 83.4, or is it 84.3? I never get, I'm dyslexic. No, 83.3, neither one. Okay, and that's all there is to it. And then I simply go down the list. Overnight mid, 76.7. Overnight mid, 76.7. Boom. Overnight high, 75.5. value area high, 71.5. I'm going somewhere here with this, so stand by. Previous close, 70.4. We know that the previous close right over here is 74.4. IB high, there we go. IB high is 68.5. So the IB high is 68.5. IB high. And I typed that initial there because the minute we open, this flag's going to move somewhere else. Right? Overnight point of control, a previous point of control, we already have that. That's 67.1. IB low, that's way below us. Overnight low is 49.5. And that is also right under the RTH mid. Now, something that's real important to understand. These are probabilities. These are not hard, fast. Where's the previous high? There we go, 56.6. That's up here. Knew it had to be there somewhere. These are not lines in the sand. I'm not a soothsayer or a magician. This is not any kind of prediction. These are statistics. I've already explained how the statistics are generated. You need to be sure you understand that they are just probabilities, statistics. Amazingly, they bear out such a high percentage of the time. But, you know, that's what they are. Okay? Now, another thing that's pretty important to do, I think you'll agree, is to be able to trade. And how do we do that? Well, the first thing with Bookmap you need to do is activate the trade control panel here by clicking that padlock, and then select a way that you will interact with the application trading with your mouse. If you choose chart, the only place you can trade with your mouse is the active data column. If you choose DOM, the only place you can trade with your mouse are the DOM columns. And if you choose both, you got them both. That's what I do. Next thing you do is, that I do here, is I select multi-brackets. And that herein lies the methodology for risk-neutral trade management. And this is the smallest risk-neutral package you can have because they must be even numbers of contracts. So here is 2 contracts, and then you set this one stop level in ticks on this tool for the entire package. Once you have established these 2, the first risk-neutral trade scale or take profit target is automatic. It's for half of the package and for the same number of ticks positively as the stop would be negative. Then there's a runner. And if you choose, 4 contracts, same idea. If it's a high volatility and you feel like you need to change your stop size, then there's that. But that's all there is to it. Now, the key to this is that the minute you achieve the first risk neutral scale, the worst that can possibly happen to your trade is a scratch. It is risk neutral. To me, psychologically, that's a big deal. There are traders I know who have now gone through this for 4 or 5 years and progressed on. But this is where I'm at. You can determine the stop size based on your account risk tolerance, volatility of the market, ATR, whatever you use. The next thing I do here is I do the multi-account trading, select that, so that any trade taken here will be copied to 4 others. you'll notice this blue line. I mark the open of each session with this blue vertical line, whatever color you want, and it's only a visual clue or cue. When I glance left, if I don't see this blue line, I know I need to adjust it. And if I do see the blue line, I know that I have the full session in view on the chart, which is really important for context, in my opinion. Let me just do one other thing here that I need to do quickly. And that would be this. That's the T-Lab Snap, which I do every morning at about 8:20. And that is just a posting to a site that I have been a member of for some time. And it looks like this. It's just gives those folks in there who don't have the similar kind of charting a quick and comprehensive overview of the current session, all of the numbers involved for as many far back as you want, several sessions, etc. And the T-Lab is a bookmap Discord chat room called the Traders Lab. And it is free. You don't have to be a subscriber to Bookmap or whatever. The reason I continue to support that is the guy who started that is named Tom B. And he's a professional trader, 46 years or something. And I appreciate the help that he was able to, and, you know, provided for me. So I figured I could do something for them. He doesn't ever trade live. And he doesn't ever call trades. So that may or may not be interesting. But one thing I assure you is you will not be solicited to buy anything there. So, and I don't make that recommendation for any other websites or Discord chat rooms or, you know, even on Bookmap, because I've certainly not visited all, but the only other two that I ever did visit that were typical. The second word out of the guy's mouth was trying to sell you something. That's not interesting to me at all. I'm here to focus on trading and statistics, to developing my trading business as a consistently profitable business, not a video game or gambling or, you know, clicking the mouse like you're killing snakes, any of that stuff. And it's a business of statistics and probabilities. All right. So having said that, the snaps are there. This weekend is rollover. Let's take a look over here. The equities roll on September 9/15 at U.S. equities. So expiration is on the 19th, but you know, that's quad witching right there. Triple witching in the States, quad witching everywhere else, because we dropped, I think, single stock options, I believe. It was anyway. So I'm going to be rolling these contracts Sunday night before I at the open. I start pushing these levels and my data at 1700 every Sunday evening, assuming it's not a holiday. And by the way, I push these session prices freely 24/7 from Sunday at 1700 to Friday at 1600 for anybody that can use them in Bookmap or any kind of charting you want to use, whether it's even just an Excel sheet. And there's a lot of people that use them. So if that would be helpful, then drop a how do you do or something, and subscribe. Thumbs up, subscribe, and drop something in the chat. And we'll see who pitches up today. Pretty quiet in here yesterday. But again, this is my virtual journal. And the idea is to focus on trading. And if it helps other people, that's great. I want to point out that we had new all-time highs again. This irrational exuberance is going to come to an end, I'm afraid, but we'll see. Here's my all-time high, POC. We've got our levels marked in here. We are still holding higher out of range. Well, or are we? Just barely. If we drop below the developing value area high, we will be lower in range. I just find that so irritating because then I have to change the statistics around. But beware of that. Now, higher in range, higher lower in range is not a dramatic change for the key numbers. Here's higher in range, here's lower in range. So let's look at the POC. 83.3, 84.4. So it's basically 1 point different, 1 percentage point different. The overnight mid is 76. The overnight mid is 83.2. So it's substantially more percentage variant as we change. And the relationship of some change. You notice that the overnight high is down here at 52 on the lower end range, and the overnight high is up here at 75 on the higher end range. Makes sense, right? So these little turds, and they do this frequently. I hate it when they do that, but it's a sign of indecision. And I'm not going to rush around and change everything in a big hurry. I'm going to let this market open in 2 minutes and see, because very simply they could just pop right back up here over the top, no problem. I'll wait for the open to be set, and then in the course of time this morning, before the IB sets, which is my first trade possibility, basically because I am vetting the IB trades, I'll be able to make those changes, should one be necessary. Now I'm concerned with, is my open gonna reset? Probably. Oh, I forgot to do one thing here. After you've set your brackets, etc., confirm this is the right price or right package size. Notice that these in-trade statistics here are the same as up here. So I can click this button again. It stays green. I get my real estate back, and all of the same data metric data is up here, plus cancel and close. I don't need to have this extra functionality because of using multi-brackets. I don't need this extra functionality down here because of multi-brackets. So let's see where we are. Boop, boop. Gonna open in 30 seconds. And it looks like we're going to be lower in range now. These useless little boys and girls. I think I've determined yesterday the issue I'm having with my volume profile setting is the difference between the book map, and there we are now, at 8:30 on my clock. And Bookmap is just now 8:30, and this damn thing is not setting properly now. Yesterday, it worked at 8:30. I'm going to give it a minute and see how long it takes on my clock, computer clock, to reset, assuming that it will. Then I'll have to go through a bunch of drama to get the volume profile and the POCs to be accurate. So frustrating. Assuming that it's ever going to do it. Really annoying. I have this computer with a special task that syncs the clock to UDT every morning at 7 o'clock. Well, this is not working at all there now. That's really annoying. And I shouldn't have to do the double click, right? That's just stupid. Now I need to change my IRT charts to full session, or from full session to the IRT, and you just do that very simply like that to the day session only. What that does is it aligns the value area high and the previous value area highs. I'll tell you about that in a minute. As soon as I finish this, there's the micros, by the way. I plot the same configuration for the micros as I do for the minis. And these are the value areas, or the naked volume points of control. And save that. And get back over here to the business at hand. So irritating. Thought I had it figured out too. Okay, so let's, first of all, I'm going to reset configuration. I have this at time. I'm going to change this to session start. And go okay. And then I'm going to go reset, clear resets. Well, that seems to be okay there and okay there. I changed my time parameter from Chicago to, which is where I am, to my, it's UTC -5. I don't know. Really irritating. Worked like $1 million for years, and then all of a sudden it's struggling. Now I'm going to set that vertical line I talked about, and this is strictly for visual reference. IB high, IB low. You see where the IB high was from yesterday. And what did we end up doing? Where's the damned open? Right there. So our open was about a tick below the developing value area high or previous close. Thank you so much. If we look at IRT, we see that they conveniently let us know that it's lower in range, not higher. So I'll change some of these statistics around. 84.2 went somewhere right there. 84.2 was the POC, or is the POC, AV POC. Overnight mid, 83.0. This is for the record, right? This is for the stream only. And what was this boy over here? The previous close. 67.2. Well, that's not very probable, is it? We don't take that out here. I think we already have, to be honest about it. What else we got? Overnight IB high 70.3. Overnight low 66.9. Big difference down here. $52.1 for the overnight high. I'm just doing this for the sake of the recording and posterity. What else do I have going on over there? Previous. Where'd that go? Previous low is 51.4. Previous high is 39.9. Ooh, 39.9. And 50, whatever I said. 51.4 previous low, which is way below us someplace down there in the boondocks. I won't worry about it at this point. So we've taken out our POC low. We haven't gotten the mid yet. We've taken out, I think, or just almost the close, the open. And that's probably good enough for now. I want to try to get these up to about what I typically like to do here is have the entire session in view, as I said, and have the price scale at 1 point high. In other words, 52, 53, 54, and within each one is 4 ticks, obviously. And that's basically a flat line over here if I do it that way. At this point with this open type, we're dangerously close to a new all-time high. I don't know how much, if the drugs are holding out, if they're going to keep going up or what they're going to do. $57.2 was the value area high. Previous. So yeah, and we don't have any numbers till the top of the hour. Remember, we've got Michigan at the top of the hour. That's often a market mover. And value area low is 69.3. Now, these are previous value areas. Okay, the difference between value area low and high, developing value area low and high, is as follows. The developing refers to this current auction. The developing value area low and high refer to the previous auction, and because I have set my IRT charting at day session only, right here, and you see it shows the expiration over here. A day session only, that means that the value area high and low, the previous auction is yesterday's RTH right here. So there's the previous RTH low, value area low, and the previous value area high. And what a coincidence. There's the previous value area low, and the value area high is way up here. Amazing how that works out, isn't it? Okay. Here's the previous value area low, and there's the value area high from yesterday, from previous RTH session. So here we go. We got news at the top of the hour. I am vetting the IB statistics trades, so I have to only monitor and anticipate and narrate the market for the first 1 hour, because the IB statistic does not become active until the IB sets, initial balance sets, and that is at 9:30. And I hope I've been talking here because I just see the mute on the thing. So, oh, Antonio. Oh, very definitely, my brother. Yeah. I'm probably way more acute. Anytime I'm on tilt, I didn't sleep good, my data's screwing up, something's happening, I'm hands off, absolutely. Especially in this heightened political unrecognized risk situation. It's you need to really, really restrict the amount of risk you put on, or the exposure you put your account to the market, I believe. So A+ setups only. Good man. Hit the beach, dude. Vamos por la playa. I will. I'll try to see if I can muster one. This is rollover weekend, by the way, Antonio. Monday I'll be rolled to the Z contract. When you guys come on, I'll do it Sunday night. But so let's get back over here quickly. Yeah. There we are. I'll be rolling that on Sunday. And we still have news. The Michigan sentiment number is at the top of the hour, so be careful. The random risk is over with. I'm pretty sure he's stopped talking. Trump was having an interview with Fox and Friends this morning. Amazon and Google probed by the FTC. They're not liking that much. Ooh, that's gonna be a hit on the NASDAQ. Okay. Good. They're both jerks. I don't have no love lost for Zuckerberg or Bezos in my world. I will say, no, I won't. Crying over spilt milk doesn't do you any good. There are no missed opportunities in the market. There is only the next one. Another way of looking at that is, I find, good psychic point of view or psychological point of view is that, it's like miss that opportunity. The market provides a continual flow of new opportunities. Miss that one, what are you doing? I'm waiting for the next. I missed that bus. I'm waiting for the next one. Simple. And that's a good way to look at it, I believe. Well, here we are at 1 point high. Session open. 1 point high. And this looks like a flat line and an EKG going on over here. What would you say the context of the day is so far? We're in a 5 handle 6. Call me a liar. 6 handle range. Where are we? What are we doing? Who's on third? I don't know. I think the market's in the hole. We've got some flopping around over here, but but 10 minutes to that number. What am I doing here? What's going on? Everything's okay. If you had to look at the market and ask yourself, do we have any opportunities? I hope you would say a resounding no. I see people still out there trying to trade this mess. Jesus. We're essentially flopping back and forth between the POCs. Isn't that amazing? Look at that. And this is only 1 point high, right? This is not like scrunched down. So in other words, the entire market from here to here is the risk neutral scale or my stop. And there's 1, 2, 3, 4 levels, 5 levels in the way, in between. That is definitely not a target-rich environment. That is maximum risk. And probably some of the lowest profit potential I've ever, that you could ask for, or that you could imagine. They're waiting for the Michigan number, which is the final. The Michigan number is the final potential road bump or bump in the road for the Fed. And that's, of course, the whole thing that the market is foaming at the mouth about is this rate cut, because they they don't care what happens to Americans. They care what happens to their P&L, which is, I guess, the way of the world. I would prefer to see it better for both, but it used to be the case where what was good for the people was good for the economy, but that's not necessarily the case anymore. As a matter of fact, it seems to be quite divergent. In the short term, maybe in 50 years it'll work out. I don't know. All right, 6 minutes to the top of that hour. Top of the hour here, boys and girls. 3 minutes. Incoming number in 3. Basically. I don't know which gets the number out quicker, actually. Top of the hour now. Watch for this news. What happened here? Why is that? I didn't want that. I don't want this. I don't want that either. Okay. Doesn't want to align with this price here, and I'm OCD enough that bothers me. Okay, 30 seconds. Michigan consumer sentiment. Five seconds. Watch the book clear out. You see that? You see how the book immediately cleared out? It's a negative number, I'm guessing. It's not good, I would think, from the looks of it. Is it one of those buy the rumor, sell the news kind of things, or sell the rumor, buy the news, or I don't know, however it goes. University of Michigan prelim 4.8, forecast 4.8. Well, that's okay. Actual, not good. $55.4, forecast 58. What's happening with our volume over here? Whoa, look at this. Wow. That's pretty crazy. Mm. 64.5% of the volume. That's not a lot. Wow, look at this mess. That's about a nothing deal, if ever there was one. And we're still in that tight range. Basically 9 handles now. Well, this doesn't look particularly conducive to a successful adventure into the market here to me, which is kind of understandable, I guess. And here's our session. Jesus Christ. I can't tell you. Come on now. Mr. Mouse, stop spinning around. Well, remember that I am working on the IB statistics grades, of which there are two. The IB failure and the IB continuation. And I can very definitely assure you that I am going to be, as much as I hate to say it, extremely cautious about the idea of trading here today, looking at the market. We're 9 handles in the first hour, 10 handles in the first hour or so. And remember that the IB statistic does not set until 9:30. Therefore, there is no IB trade until after 9:30 Central Standard Time, the first 1 hour of the RTH trading session. Well, certainly no trade for me, unfortunately. And yeah, irritating, very irritating. When my wife makes the best food, she's an incredible cook. Got some fresh, hot, baked, fluffy, buttery croissants. I'll be muted off and not to chew in everybody's ear here. Okay, we approach the world famous IB statistic here. Which is, there is a greater than 97.7% probability that in all four open types up here, that the high or low of the first 1 hour of trade of the RTH session will be exceeded by price in the balance of the RTH session. That's the statistics. Been around forever. And it is right here. 97.9, 98.2. In this particular instance, it's 98 point, or open type, and lower in range, it's 98.1. And 97.9 is the lowest of them. So, I just noticed something here. I need to change this column title to lower in range so I don't screw myself up down the road. So, what does that mean? That means that after 9:30, this level or this level will be exceeded by price at some point in the balance of the RTH trading session. That's what that means. Nothing more. There are two trades associated with that statistic. First of all, let me say, absolutely do not trade to the statistic. And what do I mean by that? I mean, oh boy, we're above the mid, we're above the POC, we're above both VWAPs. There's the IB high just above us. We're going to take the IB high. I'm going to go long. No, you're going to get salt pounded in your butt a huge percentage of the time because that does not work. Today it may work. Today they may trade up here, take that IB high, and okay. Very frequently something like this will occur. And you'll get stopped out. So do not trade. This is my personal experience. And remember, this is my trading journal. So I'm talking to myself. Do not trade in anticipation of or toward the statistic. It isn't a statistic until 9:30, until it's been set. Until 9:30, the IB high will go up. The IB low will go down with price. So that is a big something I found out the hard way. The hard lesson learned. All right, back in the saddle here. We're going to be, the initial balance will be active in another 3 minutes. Just confirming my time zone settings here for this volume profile, which is driving me nuts. Short trip, I'll admit. Time zones. So I have always had it on local time, which is UTC -5. I changed it to UTC -5 down there at custom to see if that did something this morning, and it did not. I'm going to also reset this, and hopefully I'll remember it next week. I'm going to set it to session start from at time, which it had been at time, 8:30 Central Standard Time, forever. Oh, 8:30 apply. No, now what's it going to do? Now it wants to start over. Well, that's not very good, is it? That didn't work out like I had it planned. God damn it. Let's see if I can reset this. No. Well, that was probably not the best thing I ever did. I'll leave it there, I guess. And then over the weekend, I'll change this to session start. See if that changes something. Okay, anyway, we're back to business. You know, the mind of the obsessive compulsive is a busy spot. It just frustrates me when you pay a lot of money for a tool and things, and then equipment, tool. I build these computers myself, so I know what's in them, you know. And it's frustrating. Now I'm going to have a little conversation here. We have now passed 9:30. So the IB statistic is in play, meaning that we, at some point in the balance of this trading day between now and 1600 this afternoon, or, you know, 5.5 hours from now, this level or this level will be exceeded by price. Simple. That's the statistic. That's the basic statistic. Better than 97%. In this today, in this open type, 98.1% probability that that'll happen. For me now today to trade this mess, first, there's no statistic has been taken. That specific IB statistic has not been taken out. The trade is, after this statistic has been achieved, there are two options. There is the IB failure, which is essentially it comes down here or up here and it can't get anywhere. It comes back in, which is a mean reversion trade. Mean reversion. Or it goes down or up and continues on, which is, now, think about it logically. If you've got a day where the entire session so far for the first hour has been rotational and balanced, what would be the context? Which of the IB trades would be suggested by the context? It would be the mean reversion, because that's what we've been doing for the last hour. If we've been in a directional kind of a day, then we would be looking for the IB continuation trade. Okay? Given those thoughts, then, I have to take it to the next level for me. I have range requirement for my validation of an entry. Also, common sense. Look at this mess. We're in a 10 handle range in the first 1 hour. We've got all of these levels tightly packed inside of this 10 handle range. Any one of these levels will constitute an opportunity for price to bounce or react. That is not a favorable trade environment for me. That does not make sense to put risk on in this, to put risk on or to risk my account, however you want to phrase it, in this environment. That's not an A+ trade setup. That's stupid. You get short up here, you come up, let's just imagine, you come up here and take the IB high. We trade up towards the value area high and we come back in. What do we got going on? Boom, bitty boom, bitty boom, bitty boom. And where are we going? Even if it works miraculously, we've only got 6 handles to the mean, to the target. That is not the point of my business. My business is to be consistently profitable and compound the account with using highly probable trade setups in a very favorable reward to risk ratio. This is not either of those, this kind of an environment. And it's very possible we'll take out this thing, we'll come up here and get the IB high, the previous high, a new all-time high, and fly up here to who the hell knows what. Very possible. Yesterday, we zoomed up 50 points to the 66s out of the 66 halves. We opened down at 65 half basically, and we traded up over 6,600. 50 points. That was a completely different day. That was a directional day when an IB continuation trade was absolutely suggested or indicated, and I screwed up and didn't take it, but that's a different story. That's my problem. Paralysis by analysis, which is different than FOMO and fear and, I've got to make a trade kind of thing. One thing that's really important to remember is effort does not equal reward in trading. In other words, I don't know where you grew up or care, none of my business, but I grew up in a situation where, the reward you achieved or that you gained was directly related to the amount of effort expended. I grew up on a cattle and horse ranch in Montana. Hay and branding, moving cows, fixing fence, all that stuff was all the amount of effort you put in from can to can't every day was directly relational or related to the effort that you achieved. And that's kind of the working man ethic, and it's not the right one to get anywhere, and it is certainly not the case in trading. Trading is very definitely, the more you trade is very definitely not a direct relationship to the amount of reward you receive. quite the contrary, usually. So to not trade is not, very definitely not a bad thing. To not take a vetted setup and rely on the law of large numbers is a bad thing. And I'm guilty of that one frequently. But in a situation like this today, I'm not. There are three positions. There is long, short, and flat. And oftentimes flat is the best position. Or in terms of the bigger picture, which is account preservation and compounding your account. You know, if you like adrenaline and you want to exercise your clicking finger, or it's a video game or whatever, then get after it. Click hell out of that thing. And don't spend a lot of money on charting and bookmap and those kind of things. Get some kind of a account where you get a, bar chart and it's free, and get after it. And that's perfectly fine. This trade, this stream is not a situation of my way or, my way or the highway at all. Whatever works for you is what you should do. I'm trying to develop what works and makes sense to me, for me, and to support myself and my family and, our life and all those things. Quite an understandable day. The market has been, on crack for weeks. All-time high after all-time high after all-time high. Oh, we need a rate cut. We need a rate cut. We need a rate cut. The political uncertainty is, brimming over. Accusing people of stuff and ruining their lives and careers without any evidence or proof or legal process, due process, it's just crazy. But that's where we are. And this week has been a blackout week for the Fed, because next week is the rate decision. I can tell you one thing for absolutely sure. If you want to watch the market go short about 200 handles faster than you can say don't, watch it. Watch Wednesday, the 17th, when the Fed comes out and says we're not going to cut rates. I don't believe for a minute that that's going to happen. I think they'll give a 25-point basis cut. But I'll tell you one thing. If they do that, you better hope you get short and do it in a big hurry. Because that's going to be the rug pull of all rug pulls. And I don't believe that's going to happen, but at all. But I'm just using that as an example of why you should not be involved in the market going into those kinds of decisions, reports, numbers, etc. That's not how you manage your risk. And I will repeat again, maybe every hour, the goal of a trader, the prime directive of every trader, is to preserve your account and grow it, compound growth, right? And you can only do that through risk management, taking high probability trades which have an asymmetric relationship reward to risk. Or in other words, this is a bad day to have that example, but let's try to make one right over here. If you short right here, you're wrong one tick above the IB high, and you have to accept this before the fact. If you were to take a short right here, you're wrong right there. That's one tick, and you have the potential to come down to the POC, or these heavy levels down here, or perhaps even the other side of the range, because it has been balanced and rotational. That is asymmetric. That is an asymmetric relationship between risk and reward. You want to have at least 2 to 3 or more risk-reward ratio. Reward to risk, excuse me. I don't think it makes sense to say 2 to 1 risk to reward. That infers to someone, oh, I'm going to risk 2 to make 1. That's absolutely backwards. That's like 1 step ahead and 3 steps behind. That's not growing your account or the compound growth of your account. And it's the same anyway, you know, in any business, anything, anywhere, except these tech guys that are, you know, getting big valuations and investment from, you know, private capital and all these people that haven't made money ever and never will make money. I was around in the .com bubble boom, right? Those guys never made a profit, never ever made a profit. And $1 billion market caps. And it all blew up because they was just, you know, smoke and, you know, smoke and mirrors, man. There was nothing there. That's not a sustainable business. FTX, Elizabeth Holmes, Rambus. Pick one. It's especially, memories are especially fresh. Around 911 here, I remember very definitely where I was when that happened, and the result of it to my account and to the world, of course. So this is not. Now here's an interesting statistic that I do not remember ever having seen this occur. We know that there's a 98.1% probability that one or the other, IB high or IB low, will be exceeded by price at some point in the balance. What happened to that? Oh, I know. In the balance of the RTH trading session. Okay. That thing was for these the levels there. Anyway, there is then a 1.9% probability that neither the IB high or the IB low will be taken out or exceeded. I don't think I've ever seen that. And I would imagine I won't see that today either. But that is statistics and probabilities, right? And there's about a 32 or 3 or whatever it is % probability that both will be taken out. What is that? Looking, and remember that these are all statistics based on a look back period of 2,000 days. Both. B high and low is 32.8. Right there. Where it went? 32. Oh my God. 32.8. This is the probability of one or the other. So the opposite, or the opposite of this one is 1.9% probability that neither will be taken out. Never have seen it that I can remember. That'd be a pretty big deal. Remember that our range right now is 10 handles. 85 to 95. Okay, call me a liar. 10.75. Are we going to take the IB high? Likely. Is it a plus kind of a trading day? Absolutely not, because there's no range. This is a good day to go to the gym, mow your lawn, chase your significant other around the couch, whatever. You know what I mean? And, okay, having said that, again, the caveat, this is not for your trading advice or financial advice. I'm talking to myself, number one. Number two, just as likely we'll take this out and something will happen. There'll be some risk or some tweet or something, and we'll take out a new all-time high and keep going. Very possible. That's why it makes no sense to predict where the market is going. You can anticipate where the market's going. And the most important thing to do is statistically identify the setup and the parameters that qualify the setup to take, and then capture a data set of that, which is statistically significant outside the as best you can outside the probability of random occurrence. And if that particular setup and criteria has a positive edge, expectancy, whatever you want to call it, probability, then you take every one of those that present themselves. That's the gaming theory. That is the finding the realization and the methodology of the most successful traders and hedge fund people in the world. And as I said, it's the business model of the gaming industry from the point of view of the casino. They don't take, we're going to get the IB high now, so that statistic will be set, I'm sure. I would suppose. But from the point of view of the casino, they play no game which they have not pre-identified an edge and specific rules. On the casino floor, then, their only mission in life is to play that game as many times as they can, because they know the law of large numbers will manifest the edge, that expectancy that they've predetermined to their bank account. They know there will be random occurrences where there is 10 winners in a row. They know when that happens, they don't get upset. They don't shoot the dealer. They don't change the rules. They just deal the next hand. The object is to get as many occurrences as you can. It's the law of large numbers. The results of the next trade are meaningless. They just are one more brick in the wall, you know? If you're having a series of losers, rather than freak out and change everything, you look at the statistics. When I vetted this setup, over 100 trades, I had a win rate. I achieved T1 50 times. I achieved T2 whatever. I had 25 stop outs. Whatever it is the current trading result within those parameters? If it is, then you just keep going. If it's not, then you can keep an eye on it. If it gets substantially outside the parameter, then you better figure out was there a meaningful and fundamental change in the market for some reason outside, which puts that to the current market outside of the market where you took your statistics. That's why the larger the data set that you look back, the more accurate it will be. If you flip a coin, everybody knows a coin flips 50-50. Just as the probability of the market is 50-50. It's binary, like a coin flip. Can go up, can go down. That's it. Probability of the next trade's 50-50. It's either going to go up or it's going to go down. Time has got nothing to do with it. That's what we put on it. So it's basically a coin flip. And everybody knows a coin flip's 50-50. And nobody would be surprised if a coin flip, you flip a coin 10 times and there's 8 heads. That's a random distribution. You flip the coin 1,000 times, probably going to get pretty close to 50-50. 10,000 times, probably going to be, 51-49 half or something, who knows. But you see the point. It's the law of large numbers. And if you have an expectancy of 10%, 10% of $1 is a dime. 10% of $1 million is $100,000, I think. You know what I mean? That's how it works. That's the law of large numbers and how it manifests and compounds. And I'll bet you money there's people right now trying to trade this to the IB stat and looking for the value area high and the previous high and all that crap. But I just don't think that's not something I'm into, and it's basically been a rotational day, so that's the context. There we go. There's our statistic. Is it? Not yet. Now, one thing that I have noticed that's happened, and I've been trying to figure this one out, determining when the big tanker turns, right? When do we move from a balanced rotational day, environment, context, whatever you want to say, to a directional one? In other words, when would you expect this kind of a day to favor a directional move? Well, here's 95 and here's 99. So that would be an unobstructed path to the risk neutral scale, 3 points. And then you have some targets above, not necessarily, there's the statistic, not necessarily a meaningful target up there, but better than what you had with a mean reversion trade. Now we've gotten, up to our 9s. We don't really have a target here, or a setup that I see, unless you get way zoomed in and call this a setup, which I don't think it is in my world. Will they take another all-time high? I don't know if there's enough crack left in New York. Maybe. That would not be a A-plus trade for me to have just said, okay, there's our statistic, I'm going to take that. I'm going to go long there. Had I done that, I would be scaled. And, helmet on. There is at least room to move, as opposed to down here. So I don't know. I don't know the answer to that question. That's been one I've been struggling with a lot for the last few weeks. I've been real patient and very methodical for a long time, weeks now. I don't want to be FOMO-y or, get antsy or frustrated or impatient and put on a trade in an environment that is anything but positive or A+. Whatever way you want to phrase a highly probable trade setup. I don't want to blow weeks of patience and discipline on impatience and I want to get this over with. It's kind of a thing, gambling. But now I realize that's got to stop at some point. Now is this a setup? We traded down here. We did a couple of ticks. We didn't get below this. But I'm still really hung up on the fact that we are just rotational. And now only 13 handles wide in the whole session so far. Or 14. That's a toughie for me, right, to be honest about it. That's a tough one. We got 95.75. So it is entirely possible that I would not be scaled yet. Because 95.75 to a high of 98.75, and there's 379 contracts sitting at 66. It's highly possible that this would have not been, the target would have not been achieved up here. In other words, the scale. And then you're really sweating bullets. Because any of these levels can be points of attraction or points of reaction to the market. We could either, pull back down through here to the mid and the VWAP, which is typical mean reversion. React, boom, react, boom, react, boom. We have not, in my opinion, if I was spot on accurate with this entry, not scaled. With these entries, definitely not scaled. Scale is up here at 98.75. If you want to believe that 95.75, if you're that good, I don't think you could be that quick with the entry until 96. That means you're not scaled until 99. And that's a pretty big bet. And once again, and for the umpteenth time, could go ripping through the top of that thing at previous all-time high and just go zooming up to what the hell ever else. Who knows? Very possible. But if you stop and look at from the IB high to the huge liquidity, the previous all-time high, very low probability up here. Big liquidity, biggest liquidity of the sitting in the book. It's 4 points. Where's that? That's your scale. Remember that your job as a trader is not to achieve your scratch or scale, risk neutral scale and just scratch. My job is to get to the profit target. That's it. So I'm disappointed with the day, but I'm not disappointed with my interaction with it, trading wise so far. And now your butt starts to pucker. You got along, eh? Yeah. It's the joy of trading. I really to be able to eliminate discretion. I have found over the past few weeks now that I've been trading only the IBC basically, and within one trade of my profit target on these 5 contracts, 5 accounts, is that the final entry is a discretionary one for me, absolutely. You know, and it's discretionary probably because I'm not, I haven't pre-thought all the parameters or the possibilities, and certainly haven't been able to code them up with IRT. I've been struggling with that for backtesting. You know, if I were to say, well, here's my IBC, I should take that every time. But you heard me very cleanly and clearly describe why I did not do that. Well, that would mean the only way that could be non-discretionary is if I had pre-coded all these things in. And now you're scratched. You're now stopped out. I would have now been stopped out right there. So, am I happy? Well, I didn't. Antonio's busy. He has a problem. She came to say hello to you if you're listening. Where am I here now? Okay, so hopefully I'm unmuted here while I'm talking about this, but yeah, had I taken this mechanically and not having not properly coded it, I'd be stopped out, and it's turning into a meaner version. Not with any specific flag that would be meaningful to me. And this day is a flippin' nightmare. would say. We still got 330 up here at 66. That seems to be the pretty big line in the sand at this point. Oh, VPOC migration. That now thickens the plot, right? That is a setup traded by quite a few. And isn't that funny? That's the first, well, except for this little hiccup here and this little dipsy doodle at the open. That's the first VPOC migration of the day so far. Now, that is a setup followed by many. The thinking behind that, or the logic is, well, revert back to the definition of the VPOC, the volume point of control. It is the price at which the most number of contracts have traded so far in the session, 97.3. The very split second, well, and it moved from 91.2. You know, two things can happen here. You don't have to, you can act like a fortune teller by predicting where it's going to go next. I bet it's going to go right here next. And boy, it did it. I bet it's going to go up here next, 96.6. The minute this turns into 97.4, this line's going to go there or anywhere else. But anyway, back to the point. The theory being that, okay, this is the most traded price. It's important to remember that trading is a zero-sum game. They're called contracts in futures, not, here we are at the 6, right? They're called contracts because it is a contract between a buyer and a seller. They both agreed to do business there. What does that mean? It means a few things. Number one, it's if anybody tells you that price went up or down in the futures market because there were more buyers than sellers or than sellers than buyers, you know immediately that that person doesn't know anything about the market, the futures market. It's impossible. Price is only able to go up through aggression. Buyers aggressively come across the market and lift the ask. They hit passive sellers. Market can only go down, price can only go down by aggressive sellers coming across the market and hitting the bid. That's how it works. What does that mean? That means that for every contract, for every buyer, there's a seller, and for every seller, there's a buyer. So the POC then is the price at which the most buyers and sellers agreed to do business. You could look at it as the most fair price, the most agreed price, the value, the highest, most accepted value price, whatever. What does that mean? It means that that's where the most buyers and sellers traded, and likely will trade again. Now we've come back down. So VPOC migration then suggests, okay, this was the most agreed price. Now it's up here. Value is moving higher. Price is likely to continue to go in the direction of the VPOC migration. That's why this is a setup. It isn't good for me because, yes, it's obvious as the nose on your face. Where's the yellow brick road going, right? But that's just the first piece. That's just the setup. The important part is the criteria or the parameters that validate that entry in the trigger. And it can be price check at aisle 3. It can be, is it going to come down to these levels and then going to go up? And I don't know the answer to that question. It's not it is a setup that's most obviously approached first by most traders because it's so obvious, and probably the least successful. It certainly was for me. Here we are again. So we traded from here, 93. We did get scaled. You would have been scaled if you went long right there. Now you're looking at the possibility you got one more or two more ticks and you're scratched. And there you go. Is it going to come to the mid in the VWAP, the POC, or the VWAP and then back to the POC, price check at aisle 3, you know. There's so many different ways to look at it. So I don't do that. There you go. I just don't think there's any value in it. I mean, I don't think there is enough value there. Sorry about that. I think I was just talking to a mute mic. What I was describing, and I'll start over. I'm working on the IB statistic. An IB, this is how I backtest. I can either push the backtest to the chart, or I can run the straight a backtest. And I'll show you how that works. These are the rules. This is how you define the backtest, and there needs to be a full set of rules for short, a full set of rules for long. I'm doing this one at a time. You can see I'm up to version 5 on this thing because it hasn't been working very well. This would be an example of a backtest, how long it took a second to run that backtest. I'm only looking back at one day now, which is today, just because I want to see where we're at. This would be the profit. That's the number of shares, blah, 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 blah. This is not right because this should say $750. And let's look at the trade itself. Come on now. The trades themselves are right there. So there's the short at 955. There's a T1 target out, $150. And then this closed out at the end of the test at 10:30 at for a $287. Why, I don't know, but anyway, we're getting there. The way I do this is to start with one rule at a time. So the first rule here, these are some maintenance things. The first rule identifies that we've made the IB high or not, and then sets a couple parameters over here. And that functions fine. That says that there's the IB, there is the parameter that I have stipulated in that rule for the IB high. The previous we're coming up from the bottom, so this is higher than here. The the open and the close are higher than the previous high and low, or high and low is however I coded it, which says, let me look. First of all, it's after 60 minutes from the start and before 90 minutes from the close. The close is greater than the open. The close is greater than the open. The close is greater than the open. Maybe I make it easier to see here. And the open is less than the high, and the close is greater than the high. The open is less than the IB high, and the close is greater than the IB high. So it's this candle right here that took out the IB statistic. Then it sets this other stuff. The next order of business which is what I'm trying to get worked out properly, is to identify that prices, we've taken this one, set the flag. We do all this hocus pocus when we come down to right here. The low is less than this level which we set in the first rule. And this is a 1, which is a flag we set. Then we're going to set the next flag at for V-pound 83 to 1. That's the next criteria. So we should have this one, should be correct. And then the next one, which I haven't gotten down yet, the next step will be right here within these parameters. And then that'd be a sell. That's the idea. Now, what I was trying to do, because I wasn't sure I was able to get this bracket figured out, I've just set it to the low is below or equal to 91, which is this V pound that I set here. Set V pound 91, EST minus 12. In other words, this is the high, this is the IB high, minus 12 ticks, which is 3 points. So we're looking at 95 minus 3 is 92. So we're looking at right there, 92. That's correct. Right there's the number. It's actually 92.75, but well, that might be the problem. Let's see what this low is. You can look over here. The low here is 92 even. Well, that's pretty close. And that should then set this flag to 90 of V pound. These are user variables. The user variable 83 to a 1. And those things figure through like this to the entry, which is here. Okay, if V pound 81 is 1 and V pound 83 is 1, which I was doing testing one step at a time, then we're going to set these variables, and this will be an active. Let's do that right now. Oop, 1. And close and modify the rule and save the rule. Okay, so that means that if this rule fires, we're going to sell short 2 contracts. And it will have applied our risk management stuff, which is our entry is V50 is the high, and then we have V51 is our is 50 minus 12 ticks. That's our first take profit. Here's our second take profit, and here's our stop. And these are 2 conditional flags to make sure that we do those in order. That's how it works. I mean, that's the way that I'm doing it, because that's all I know how to do. I tried Python and that didn't work worth a damn. Why isn't this working? There we go. Now the next question would be, will the back test work? We should have this candle should be where we at 9:55 we should have that one happen. Then we should have our second pullback right here at 10:12. That's where we should have an entry short, because we don't have this third rule yet. Let's see what happens. Something's wrong. It's not. It isn't picking up that second rule. And now I'm going to not bog down my IRT with backtesting during this live market. And get back to the business at hand here. I guess you could call that business. What are we doing here? Wow, we're at a, 66. They got up there. That's the previous high, remember? Those 300 contracts are still sitting there. We haven't gotten there yet. We're at 98.75. We're at a 1.5 away. So 98.75 to 85. 14 handles. 14 handles so far in the first 2 hours and 10 minutes. My. That is not a target-rich environment. That is not an environment where you will have an A-plus setup and where I think you should put capital at risk. Look at all the levels across here. There is no point here. At no point did you have 3 points of a range requirement. So there you are. That's why I was playing around with the back test, but the back testing engine is having a problem. I don't know what's wrong with this machine. Maybe the RAM has got a problem. I build my own machines, and so, this is about 4 years old. It's an i9 12900K multi-core processor. 64 gigs of DDR5 RAM. And the weak link in the chain, I believe, is, near as I know, would be the NVIDIA, the GPU, which is a NVIDIA RTX 3060, 12 gigs of RAM. Beats the shit out of me. Should have more CPU and processor stuff going on than Flight of the Flippin' Moon. And perhaps it's simply because we have a lot of data coming through, being processed by both IRT and Bookmap. And I also manage the OBS and the streaming off this one computer. Maybe that's the problem. And I will admit, I do not know. I mean, nothing I can do about it now anyway. Yeah. At this point, I'm not buying a new GPU and a bunch of stuff. So I know that people have a hell of a lot more going on than I've got here with a lot less computer and don't seem to have any problems. So I'm not sure what that is, but I can guarantee it's pisser. That's for sure. I guess you could say there wasn't enough crack left in New York, the NYSE, to get this thing over the all-time high yet. They sure have balanced it out with a rotational day, have they not? Pretty special. Well, we have 29C here today. Air quality alerts everywhere you look. That's 85F. If you're an F'er. Trying out some different music stuff here. This is Mexican. It says Viva Mexico. Maybe kind of nice. So I don't know, if you're just passing through, throw a thumbs up, drop something in the chat. Spend money, there's all those things you could do. Not sure that music is conducive for me to be focusing here. I like Latin music a lot. I've spent a lot of time in those parts of the world, but typically it has to do with eating and drinking. As opposed to focusing. Hear what the next one sounds like. I, just running through some of these options to see what there is available to this. Ooh, Brazilian Carnival. There's a good one. That's probably pretty good. I'll check that one out at some point. Well, we finally got the overnight volume pointer control. Isn't that cute? Now, we're back to that one again. We tagged it out right at the beginning. We've tagged it once, twice, 3 times, 4 times now. Being right there, the overnight volume point of control. This music is going to make me want some beer and something to eat. I don't have a monitors in my office here, so if I want to listen to this stuff, I need to be wearing a headset, which gets uncomfortable after a while. Because I have a big gaming headset. Think of the name of anything anymore. I think I'm losing my mind. Logitech G Pro, yeah, something like that. G Pro X or something. That's it. Well, no, we can. Well, this is a fine how do you do, huh? My advice here is to not to preserve your account, monitor this stream if that's the idea, or the markets, but use extreme caution. Better off to go do some exercise, do something for your health. What I'm going to do is take my own advice, and the boss has let me know that I need to take her out on a couple of errands. I'm the soccer mom here. I do all the driving also, so that's what we're going to do. And when I'm back, we'll join the stream again and look back into this back testing. I think that's the most productive use of my time at the moment. All right, so back I am here now. That was a prolonged extra extravaganza. And what have we done? We have gone, well, they're trying to poke up there to the new all-time high. All right, so what have we got going on? Ooh, new all-time high. Aren't they going to be so proud of themselves? Ah, there they go. There they go. So, if you took an IB failure out of here, didn't do you any good. IB continuation from here. This is all rear view mirror now, having nothing to do with reality. I wasn't even here. Yeah. Good for you. And what are we doing really? $15-point range. Holy smokes. Is that right? 85, 95, yeah. 15-point range so far today. Man, that is staggering. I hope that if you were involved in this, you were patient and didn't get chopped up. Because I can tell you, that's what the majority of traders did right here. They got chopped to pieces. Retail soup. A big batch of retail soup. Brazilian Carnival. Okay, now that's some pretty lively. Batuchada Madness. El equipo de Nortes. Never was, ever. Lucky enough to get to Brazil. Maybe this is too much fast pace for. Yeah, I'm trying to find other stuff here on this this epidemic music thing I've got. That sounds a little bit too much. I think it's all too much. It is what it says it is. It's Brazilian Carnival, the march music. So that's a little too. That's too upbeat for a quiet Friday afternoon. Let's look at one of the old favorites here. This is probably a little better. I think we'll just do instrumentals. I think is probably better. For me, if there's words, it takes my concentration. I start trying to understand the language or whatever. All right, now what are we doing here? And there we go. And let's sell it back down. Because there's absolutely no reason to be up here. So let's take a quick spin. First of all, what is our volumes like? What are the volumes like? Well, we haven't made any headway. We were 64% and change 2.5 hours ago. Now we're at 66% volume average per average. Our ATR is down at 2.25. You can see what we've done. This is yesterday's RTH. Here's today's so far. The NQ. Micro composite. You can see that we're just lapping over ourselves here. This is short covering, they say. I'm afraid to look at the news. I just get mad. Well, we know the numbers that were out. Michigan number was a considerable miss. Some pretty worrying developments. Pretty worrying developments with members of the administration saying random weird things just to incite bad feelings, I think. Disappointing. I don't know. It's yeah, disappointing, I guess, all I can say. And now, here we go. I'm going to point out the fact that this is only 4 handles from here to here. Just barely scaled, even if you, for whatever reason, were bold enough, quick enough to take advantage of this V reversal here, which is about as sharp as you're going to get, I think. You'd be pretty lucky to have gotten it quickly. And I have no intention of trying to do that today. This is, I said at the beginning of the stream that I expected this day to be complete chop fest. In this environment, my mission is to protect my account. And in so, by putting on the minimum amount, only A+ trades, limiting the risk to only high asymmetrical trade locations. And that's, I don't know what all this crap's about. This is not news. This is obviously somebody talking about something. There's no news, no reporting, no nothing that I am aware of. Let's look and see. There might be some numbers out. Baker Hughes rig count? No, it's over with. So there's nothing coming up and there's nothing in the works. However, that doesn't mean that there's not somebody talking, which has been going on all day since 7 o'clock this morning. And so that's what I expect is causing this randomness here in the market. This stuff here. through the day, I caution about protecting your account, limiting your exposure to risk. Here's a perfect example. There is no way you can manage that risk out of no place or here. And there's no reports, there's no numbers. That is unexpected or unanticipated critical risk. My guess is somebody somewhere, maybe Trump is tweeting something on Truth, whatever that deal is he's got is called. I don't know. I have no idea. But something happened. Something happened that wasn't scheduled. And there we are. That's my opinion. And exactly why I continually warn against, if you're sitting here in a trade and you think, oh, I'm going to take this IB continuation and I'm looking for my 10 points or 12 or whatever else it is, and you're trailing up maybe, you got hammered. Or the other way around. If you're short and trying to trade back to a failure back to the mean, you got hammered. That's nothing you can do about that, except limit your exposure to risk. That I know of. If you know of something, let me know. That'd be fantastic. I'll try to poke around and see what else I see here, but you know, there's nothing here. There's nothing planned, obviously. I mean, the last thing was Brent. Let's see if we can see. Now, something to remember here while we're just on the subject of random announcing. This is rollover weekend, so I will be rolling over my ES and NQ this weekend on Sunday. So I will open, and when the stream starts Monday morning, it'll be I'll be quoting the next contract, which is the if I'm not wrong. Well, that's important to know. See what we got going on. Oh, wait a minute. What am I doing here? Yeah, let's see what else we've got going on here. What's Financial Times have to say? Oh, they arrested somebody 2 hours ago, so that's not a big effect there. What else the Wall Street Journal have to say? This big strike on Doha is in Qatar. Out of no place, this Netanyahu and company need to be put on a leash, or something needs to happen. And apparently Trump is going to be having dinner with the Prime Minister from Qatar tomorrow night, so that's been a pretty hurried up thing. What happened about Bloomberg? They don't usually have much to say here, I don't think. They've already released this guy's name. That's pretty amazing. This country has really gone down a nasty road. Okay, I don't care about any of that stuff. Particularly. That's BBC, CNN, that's all, they'll be all over this thing. Okay. Well, that certainly isn't the reason for this reaction here. The reason for this reaction is some comment from somewhere. There you go. So yeah, welcome to the Power Hour on the final week of trading the U contract. Excuse me. It's a kind of a beautiful day here, hot, but otherwise it's 32C, which is 90F for you F'ers. Those of you who F. And speak of the devil, the disbursement checks just arrived, UPS. As the second I said that, pretty funny, huh? Okie dokie. So here we go, boys and girls. It's into the power hour. Who knows what the hell they're up to? I mean, we did extend up to 20 handles now, so wow. Wow. All right, we're turning the corner here now. And we pull back to essentially the open. And I've got to get to the bank before they close. So if I'm not back before 1500, have a great weekend. And I'll, what can I tell you? I'll see you Monday morning. Remember, it's the Z contract. The rollover's this weekend. Well, that wasn't very much fun. Back now. So have a great weekend. Remember, there's a rollover. This weekend, we'll be on the Z contract. I'll be streaming at 8 o'clock on Monday morning. Have a great weekend. Do something for your health, as will I.